China now has roughly about as much trade that it settles in renminbi as it does in US dollars. So that's a very profound shift. And of course, the huge catalyst to that shift, if you'd gone back 3 years ago, the amount settled in renminbi was a tiny fraction of the amount settled in US dollars. But 3 years ago or 2.5 years ago, we kicked Russia out of the dollar system, and Russia therefore had no choice but to move to non-Western currencies. And the more obvious non-Western currency for Russia to trade in became the renminbi. So all of the natural gas trade, all of the oil trade, all of the coal, the iron ore, anything that Russia could sell to China, and there's a lot, because basically everything Russia produces, China wants. Then all of a sudden that shifted from being priced in US dollars to being priced in renminbi. That was a huge boon for China. Having the ability to pay for your commodity needs in your own currency is an absolute game changer, because you can always print your own currency. And if you've got somebody on the other side who's basically, you've got them over a barrel, they don't have a choice but to accept your currency, that leaves you with tremendous power. So, the reality, of course, is when we kicked Russia out of the Western trading system, the big winner was China. We gave China a huge shot in the arm, which perhaps helps explain why all of the cataclysmic bearish scenarios on China never materialized. Why, you're not going to get to see a Michael Lewis book on hedge fund managers who made a fortune shorting China, because even though the stock market went down, the stock market went down by 2/3 in 5 years, and the real estate market went down by 1/3 roughly over those 5 years. The reality is that the Chinese economy has continued to hum along, not at the growth rates of the past, but the economy didn't implode. And this is something I often talk about with people. I often say, look, imagine if in the US, the stock market went down by 2/3 and real estate went down by 1/3. What would movie sales look like? What would restaurant sales look like? What would car sales look like? The interesting thing is, in China, all of these things are hitting all-time highs. Now, I'm pretty sure if the stock market was down by 2/3 and real estate down by 1/3, car sales in the US would not be hitting all-time highs. Neither would restaurant sales. The economy would look like a big black hole. It would be a balance sheet of epic proportions. Now, granted, part of that is the fact that as an economy, the US economy is massively financialized. You have a stock market that today, if you take the US stock market, 55 trillion or so dollars in market cap. And if you take the private sector GDP, I always think that GDP is such a weird measure, because if you increase your government debt, you increase your GDP, but it doesn't mean you create growth. So if you take the US GDP, roughly 28 trillion, you take out the roughly 10 trillion of government, it leaves you with an $18 trillion private sector GDP. Today, in the US, you have a stock market that's 3 times the private sector GDP. So that's why when the stock market goes up or down, it does have a big impact. It's the tail wagging the dog now. The stock market is now so much bigger than the GDP that when the stock market goes down, it impacts the GDP instead of the other way around. In China, the relationship was never like this. In China, only 10% of people own stocks. In the US, 70% of people own stocks. So if tomorrow the US stock market goes down 2/3, 70% of people feel very poor. In China, the stock market goes down 2/3, 90% of people don't care. So it's a very, very different, backdrop for how things work. But it does tell you an important thing, is that when the economy becomes so over-financialized as it is in the US, having a 2/3 drop in stock market in the US, I think, as a policy choice is impossible. It's just not possible. So what we have in China, stock market goes down 2/3, and every foreign investor is jumping up and down saying, why doesn't the government do more? Why doesn't the government do more? And the answer is, the government doesn't do more because only 10% of people own stocks, and it doesn't really matter. Most companies don't fund themselves through equities. Where the equities settle doesn't have that much of an impact on growth. completely different, of course, than the US. Again, the US stock market goes down by 2/3. It's a nuclear meltdown in the economy. You might not realize what's particularly fascinating is that today China's exports to other emerging markets, to the broader developing world, are now bigger than China's exports to the developed market, basically to Western Europe and the United States or North America. So yeah, China's trade is absolutely booming. You know, the investments that China made 10 years ago in things like the One Belt, One Road, the Silk Road Fund, the Asia Infrastructure Investment Bank, all the things that we sort of laughed at and said, oh, you want to have trade with Kazakhstan? Oh, who cares? Sure, have it. You know, it's all yours. The reality is, if you look at the BRICS countries, China now does more trade with the BRICS countries than it does with the United States. So you've seen a surge, an absolute surge in Chinese growth. But for me, the big question is this: as we look at the $100 billion that China now, sucks in every month, where is that money going? Now, if you go back 15 years ago, we knew that, if you were a widget manufacturer and, you earn dollars, you would turn to the Chinese central bank and say, here are the dollars that I've earned, and here are the dollars that I've earned, please give me some renminbi. And then the central bank would take these dollars and buy US Treasuries and recycle them in the US. This clearly isn't happening anymore. All you have to do is look at the holdings of the Chinese central bank of Treasuries to see that it's clearly not happening. So, what are all these widget manufacturers, the guys on the other side of that trade, what are they doing with all this money? And here I think increasingly the answer, I think they've kept it mostly in dollars, which is why the dollar has been strong. And I think they've been trying to buy US assets. You've tried to keep your dollars in offshore booking centers like Hong Kong, like Cayman, like Bermuda, wherever. You earn these dollars, you keep them in bank accounts there, and from there you buy whatever's going up, and what's going up has been, Microsoft, Apple, and so forth, the Mac 7. So I think, it seems to be 15 years ago, the trade was China ran trade surpluses, the money was recycled into US Treasuries. Today, China runs trade surpluses, and I think the money has largely been recycled in Mac 7. This is a hunch. It's a hard one to prove because a lot of that money is offshore. But you have to think, okay, that's 100 billion a month. Where does it go? Which inherently, by the way, means that the strong dollar trade and the Mac 7 trade are roughly the same trade. Because if tomorrow, for whatever reason, let's say the Fed is cutting, or US growth disappoints, or US politics turn even uglier than it already is, etc., for whatever reason, the US dollar does start to roll over. And right now it does feel like it's rolling over. And incidentally, as it rolls over, Mac 7 stops to outperform. But as the US dollar starts to roll over, which seems to be what is unfolding right now, then do these guys on the other side of that 100 billion start to say, hold on, I own enough US assets already, I don't want to own any more, I am earning all this money, maybe I recycle it somewhere else. And perhaps that's what's already happening, and perhaps what they're recycling it now is gold. Gold is moving up every day. Gold is one of the few assets that's making new all-time highs, although that's not exactly true because the Dow Jones is also making new all-time highs. But if you look at assets around the world that are making new all-time highs, you've got the Dow, you've got gold, and you've got Chinese government bonds. That's it. Those are the three asset classes that are making new all-time highs in US dollar terms today. So, if now the US dollar starts to weaken, the big question, which I think is a distinct possibility as we start an easing cycle from the Fed, the big question is, where does that $100 billion starts to get? Does it continue to get recycled at Mac 7, or does it start to go other places? There's a quest to depend less on each other between the US and China, no doubt about it. But again, I'll come back to the fact that China now exports more to emerging markets than it does to developed markets. So, when I started in this business, one of my very first clients told me, look, Louis, in this business, you can choose to have a boss or you can choose to have clients. The good thing about having clients is you can have a lot of them. So if you lose one of them, it's not the end of the world. Also, if you don't like one of them, you don't have to pay attention to them. But if you don't like your boss, things get tough. Now, if you compare China's situation today to China's situation in 2008, in 2008, most of China's trade was going to the US. So the US blows up, and then Chinese growth blows up, and they find out, okay, all of a sudden, you have 18 million workers that lose their jobs overnight, and they have to do all this infrastructure spending and just funnel a lot of money into public works projects to keep people employed, because they had, they thought they had a client, but in reality they had a boss. Because when you only have one client, what you have is a boss. And so in this quest for resiliency, you want to move from one client, i.e. the United States, to thousands, or there's not thousands of countries, but to hundreds of clients. And China has accomplished this quite nicely over the past 10 years. And so when you look at China's massive trade surplus, which is again the silver lining today to China's growth, then you find out that it's actually with a bunch of different countries. So it's far less dependent on any one relationship than it was in the past.